everybody. Welcome back to your favorite, my favorite, Jason's favorite stock talk show, the Wealth Advisory's Top 10. We're on to May 2024. Wow, the year's just like rocking through. We're almost closed with the first half. And it's been an interesting year. The markets have gotten a little sporty out there, I'd have to say. Like traders were betting on a lot of rate cuts, and then they were betting on no rate cuts, and interest rates on bonds have sort of been going up. We've got lots of geopolitical turmoil that Jason's going to talk about later, and maybe even a little bit now. Nope, but later certainly. It's causing some havoc in the oil markets. I mean, things are just getting a little bit crazy, but at the same time, you need volatility in order to make trading profits. So, things have been working out pretty well for our model portfolio. Our top 10 stocks for last month were mostly green. We had a couple losers, but pretty much the rest of them, all of them were winners. We beat the markets so far. Obviously, like this doesn't come out until a few days after we film it, so things could change between now and then, but things are looking good. We're outperforming the indices, and that is what we try to do. So with that being said, let's go ahead and get into it. We've got some new stocks this month. We've got some making a comeback also from last month. So I'm going to go ahead and kick it off. And before I do, I just want to point out, as I always do, that we're going to run through the first 4 stocks, and then we're going to cut this off for those of you watching on YouTube. This is something that we do for our paid subscribers. So in order to get the full list, we feel that you should be a full member of the Wealth Advisory community. But we will provide a discounted link in the description below the video, so just go ahead and click on that, and you'll get a sweet deal on a full-time membership. And let me tell you, you get way more than just the Wealth Advisory's Top 10. You get monthly issues, you get weekly commentary, you get access to every report we've ever written, to all of the reports that we will write as long as you remain a member. But as I always say, if you don't want to join us, we won't hold it against you. We'll keep putting out these videos with the first 4 as long as you want to watch them. All we ask is that you subscribe to the channel, hit the bell to make sure that you're notified when we post new content, and give us a thumbs up if you like the videos. And honestly, drop us a comment. We love to hear from you guys, and we rarely do. So please, drop some comments. Opposing points of view, questions that you might have, some other things you want to hear us talk about.
Just straight compliments. Just say nice things about us.
I mean, we do appreciate compliments. They are nice to hear. And so with that, now that we've implored you for some compliments, let's go ahead and give you some stocks that hopefully you'll want to compliment us on. And first up is going to be my pick. My number 5 pick, our number 10 pick. It had a 7% run just last week, and I think we've got more to come. So it's a Federal Realty Investment Trust. The ticker symbol is FRT. And FRT is a company that owns real estate, as the name would suggest. They're a REIT, so they have to pay us 90% at least of their pre-tax income. And they are, what might surprise you, an office REIT. And an office REIT running 7% last week. What, you say? Well, everybody thought the office was dead. It's not. But of course I'm kidding. You guys have heard me talking about this, and you know that the office was far from a thing of the past. And that's why you've been buying office REITs like FRT while everyone else acted like the office was going to die. I'm not pointing at Jason because he was acting like that, because he agreed. The office is not dead. We're in an office right now, People are coming back to offices. And anyway, FRT just inked 2 massive deals. It's filled up 50% of its newest office spaces in California. It's a specialty office space in California. Just had big deals with 2 major companies. I want to say PricewaterhouseCoopers was one of them, and the other one's name is escaping me, and I didn't write it down in my notes because I didn't think to. But anyway, the office is not dead. The office is alive and well, and people are inking big deals with FRT to get their offices. Analysts are noticing they're boosting price targets on FRT as well, and investors are finally catching on that there's a lot of value at a really low price with a super steady dividend here. So I want everybody to be involved. We're going to make it our number 10 pick and see if it can give us, maybe 7% more over the following month. And with that, I'll pass this over to my partner in crime.
Thank you.
You're very welcome,
Yeah,
sir.
so we've got, you were right about the geopolitical turmoil as much as I tried to deny it. No, it's true. We've got formerly Raytheon, RTX here. Obviously, the war's ongoing with Israel and Hamas, and then, of course, Russia invading Ukraine, and then we just saw earlier this week they finally passed the foreign aid package that sent $90 billion in total to our allies, Ukraine, Israel, and Taiwan, to defend against China. So it's really no surprise that defense contractors are continuing to do well in this environment. And earlier this week also, RTX reported earnings to the surprise of exactly no one. It crushed them. Revenue of $19 billion topped the analyst consensus of $18.5. Profit of $1.34 per share topped the consensus estimate of $1.23. Earnings adjusted for one-time items, $1.34, beating the consensus of $1.23. And net income up 20% to $1.7 billion, or $1.28 a share. Again, defense, strictly as terms of the Raytheon defense brand, 74% increase in operating profit. So they're doing very, very well. We're talking about a company that makes every missile that you can name, whether it's Patriot missile system, Stingers, Tomahawks, all those things. That's what Raytheon makes.
That's how I explain Raytheon to people.
Yeah.
A lot of times. I mean, if there's a missile and you know the name of it,
they
the
make it. Yeah, exactly. And so also another good boon for RTX, Pratt & Whitney. We talked about the recall last year. It hurt them. They've bounced right back as I predicted they would. We predicted they would for months. Pratt & Whitney sales up 23%. That's the commercial side of the business. So it's not just defense with RTX, which is why they changed their name from Raytheon to RTX to be more general about it. Said CEO Chris Callia, we are operating in one of the strongest demand periods in our history with a record $202 billion backlog. It does not stop for defense. It does not stop for RTX, so that's why I've got them right here.
I like it. That's a great one. I mean, you posted, we have and maybe we can put a link in the description to that too. We have a Discord channel at Angel Publishing, and you posted an image in there today. And so stocks, basically this morning, the day that we're filming, pretty much like everything was opening down.
Yeah.
And all of the defense stocks in that image you posted were in the green.
Yeah, the markets are down today. The Dow was down like 600 points today. I think Dow and S&P both down more than 1%. Everything's blood red except for defense contractors. Lockheed, Raytheon, or RTX, Northrop Grumman, they're all up.
Yep. It's a good place to be right now. All right, and that brings me to my next pick. This is going to be our number 8, my number 4, and it is Silvercorp Metals, ticker symbol SVM. And it ran last month also, but it pulled back over the course of the past week, and it's looking very tempting right now. It was running because gold had led the way, basically. I've been saying this, gold and silver sort of operate in kind of like what you could call a dance, where gold leads and silver follows. Silver's moves are usually much more outsized, much bigger than gold's. And so anyway, gold pulled back, and silver pulled back as well, and Silvercorp pulled back as well. But gold prices, they didn't pull back necessarily because it's sort of because gold becomes less attractive. But basically, investors reassessed rate cuts, right? And they decided that rates are probably going to be higher for longer, or could be higher for longer. And that, in the end, essentially is good for the U.S. dollar. And a stronger dollar is bad for precious metals prices and other commodities that are priced in dollars as well. So you've got, coal and copper and oil are priced in dollars as well. So, a stronger dollar buys more of it, basically. So, it's worth less of it. But, and we saw the effects of that last week, with a 5 to 6% pullback in share price on Silvercorp, a little drop in the price of gold, drop in the price of silver. But I'm honestly still convinced that the Fed's going to make the wrong decision and cut rates anyway. I think they're coming whether we need them or not. And that bodes really well for gold and silver. So I think we should buy the dip in Silvercorp. I think we're going to be rewarded this month. So SVM for my number 4, our number 8 pick. Whoops. Get over there. There we go. All right. And next up, Jason with another great stock. I love this one, man. I was upset that you took it.
Yeah, we got Sunoco here. This is an easy one to remember. Sun there. So I recommended Sunoco a couple months ago. They acquired New Star Energy, and really it's all about the transportation, storage of oil and gas.
Right,
Sunoco,
infrastructure.
exactly. We all know Sunoco is a major gas company. You've probably stopped in at its gas stations at some point. They also own convenience stores, but what they're doing now, they're divesting a lot of those convenience stores. They just sold literally $1 billion, $950 million of convenience stores and the Laredo Taco Company to 7-Eleven. So they sold that off. They're focusing now more purely on energy transportation and storage. And when they took over New Star, they branched out from gas, got a lot of really, really good crude oil assets in terms of transportation and storage. They also got terminals from Zenith Energy in Amsterdam and Bantry Bay, Ireland. These are liquid fuel terminals that really help keep the supply chain going on the east coast of the United States. This is a global market, remember. All these products are going back and forth across the ocean all the time. So to have these terminals in Europe like that is another great example of just getting the infrastructure for oil and energy transportation. They're doing well, even amid all of this stuff, acquiring companies, selling off assets. They've done a really good job of balancing things. They've maintained their outlook for 2024. They're projecting between $975 million and $1 billion in earnings this year. The stock's down a little bit over the past few weeks, so it's a really great buying opportunity, and so that's why I've got Sunoco here.
I like it. And this is exactly that infrastructure that, I've been talking about for a couple of years now, saying that, precious metals, real estate, infrastructure, and energy are the things that you really want to be in over the next decade. And this is that infrastructure. It's energy infrastructure. It's pipelines. It's those terminals. It's storage facilities. It's places where, basically energy waits after it gets brought out of the ground. It's the things that transport the energy to the refineries. It's the things that take the energy from the refineries to the end users. It's all of that. And these guys just, sort of have like a finger in every pie. Yeah, they're really great. I love them. I was really excited when Jason brought that one up. And I mean, how can you not love that logo? That just takes me back to my childhood.
Yeah, sure.
Road trips with the family and stuff. All right, so those are our first four. So let's do a little recap, and then we're going to cut this off for those of you on YouTube. Like I said, if you want to join us, there's a there's a link to a discounted subscription in the description below the video. But if you don't want to join us as a full member, that's fine. We'll keep putting these out. Just give us a thumbs up, subscribe to the channel, and hit that bell to make sure you get notified of when we put new stuff out. So with that, let's do a little recap here. Coming in at number 10, my first pick, Federal Realty Investment Trust. It's on a run because the office is not dead, and everybody thought it was, and there's still a good buying opportunity here, as I think investors are going to finally start to realize that there's a lot of value at a low price and that it pays a steady income. So we're going with that one. Next up.
Yeah, RTX, classic play. Like I said, with all the turmoil, all the fighting, soaring defense budgets, we just passed more foreign aid. Everything, all the wind is at RTX's back right now. And then on top of that, also the same thing in the commercial sector. Commercial airlines still doing very well. They're in a growth cycle. So Pratt & Whitney's coming back. Everything's coming up for RTX.
Very good. I like that one. Coming in next is Silver Corp for me. Again, silver and gold sort of run together. Gold pulled back, silver did too. I think that we're going to see weaker rates in the future. I think that's going to encourage a weaker dollar, which is going to stimulate gold and silver prices. We've got a dip that we can buy in Silver Corp, so I think we should get in on it. And finally,
yeah, Sunoco undergoing a very, very smooth business realignment right now. Major acquisitions and oil infrastructure, pairing off assets in terms of convenience stores and stuff that's less pertinent to that energy sector, narrowing the focus, realigning the business. They're doing a great job of it. They haven't even lost a step. It's not a lot of companies that can reorganize on the fly like that and get away with it. Sunoco is really pulling it off. And so if you have a chance to get in on that at the kind of level that it's at right now, it's a really good opportunity.
No, it's a great one. I really like that they're spinning off those retail locations too, because that's a low margin business.
Sure.
They're focusing on the high margin stuff, the stuff where like you spend less money and you keep more of your profits. And everybody likes that, right?
Yeah, who doesn't?
So there you have it. Those are our first 4, guys. For those of you watching on YouTube, this is where we sign off. We really appreciate you watching. We hope you become members, but if you don't, we'll keep putting these out for as long as you want to watch them. And as always, thanks for watching. We'll see you next month.